Hello everyone and welcome to our channel. Today, we're unraveling the implications of Taiwan Semiconductor's groundbreaking $40 billion investment. This is a story of ambition, innovation, and the future of the tech industry. So let's dive in. In a move that has sent ripples across the tech world, Taiwan Semiconductor Manufacturing Company, better known as TSMC, has announced a staggering $40 billion investment in their Arizona plant. This isn't just a routine investment. It's a bold statement of intent that could redefine the global semiconductor landscape. Today, we're going to unpack this announcement and explore what it means not just for TSMC, but for the tech industry as a whole. So, buckle up as we embark on this exciting journey. With this investment, TSMC is positioning itself as a leader in the semiconductor industry. But what does this mean for the company itself? We'll be looking at their stock performance, financial health, and future growth prospects. Financial health. TSMC has shown strong financial health. The company's revenue slipped 10.83% from a year ago to 546.73 billion new Taiwan dollars, while net income fell 24.87% from a year ago to 211 billion new Taiwan dollars. Despite these decreases, TSMC's stock has rallied nearly 50% over the past 12 months. The company's market cap is approximately $15.38 trillion. Stock performance. TSMC's stock performance has been impressive. As of the end of 2023, the stock price was $104. The company's price-to-earnings (PE) ratio was 19.537, indicating a healthy valuation. Future growth prospects. TSMC's future growth prospects look promising. The company is forecasted to grow earnings and revenue by 12.3% and 14.8% per annum respectively. TSMC expects to grow faster than the semiconductor foundry market in 2022. The company's EPS is expected to grow by 12.2% per annum. TSMC is also planning to double its advanced chip packaging capacity. Investment impact. The $40 billion investment is expected to have a significant impact on TSMC. The company has cut its 2023 capital expenditure outlook to closer to the bottom end of the previously forecast $32 billion to $36 billion range. However, TSMC expects its sales to drop slightly in 2023, but is ready to capture substantial growth starting in 2024. The $40 billion investment is a strategic move by TSMC to strengthen its position in the semiconductor industry. Despite some short-term challenges, the company's financial health, stock performance, and future growth prospects remain strong. This investment could potentially lead to significant long-term benefits for TSMC. If you're finding this video informative and want to stay updated on the latest tech industry news, make sure to hit that like button and share this video with your friends. Your support helps us create more content like this. This investment doesn't just affect TSMC. It could have far-reaching implications for the entire tech industry. We'll explore how this could impact everything from consumer electronics to the automotive industry, which has been grappling with chip shortages. Consumer electronics. The consumer electronics sector could see a significant boost from this investment. With increased production capacity, TSMC will be able to supply more chips to manufacturers of smartphones, computers, and other consumer electronics. This could lead to a wider range of products and potentially lower prices for consumers. Automotive industry. The automotive industry, which has been grappling with chip shortages, could also benefit from TSMC's investment. An increase in chip production could alleviate some of the supply chain issues that have been plaguing the industry, leading to faster production times and more availability of new vehicles. Tech companies that rely on semiconductors could see their operations improve as a result of TSMC's investment. With more chips available, these companies could ramp up production, innovate more quickly, and bring new products to market faster. Economic impact. On a broader scale, TSMC's investment could have a substantial economic impact. The creation of new jobs and the influx of money into the semiconductor industry could stimulate economic growth in regions where TSMC operates. Environmental considerations. However, it's also important to consider the environmental implications of increased semiconductor production. While TSMC has made commitments to sustainable practices, the semiconductor manufacturing process is energy-intensive and can contribute to pollution. It will be crucial for TSMC and the tech industry as a whole to balance growth with environmental responsibility. TSMC's $40 billion investment could have far-reaching implications for the global tech industry, potentially affecting everything from consumer electronics to the automotive industry. However, it's also important for the industry to consider the environmental impact of increased production. As always, the future of the tech industry will be shaped by a combination of innovation, market forces, and societal considerations. Tech stocks. The announcement of TSMC's investment could have a significant impact on tech stocks. Companies that rely heavily on semiconductors, such as Apple, Microsoft, and Google, could see their stock prices rise as a result of increased chip availability. This could lead to higher earnings and potentially higher dividends for shareholders. Any move as big as this is bound to shake up the stock market. We'll analyze the potential impact on tech stocks and discuss whether now is a good time to invest. Semiconductor stocks, in particular, could be greatly affected. TSMC's investment could lead to increased competition in the semiconductor industry, potentially driving up the stock prices of other semiconductor companies as they strive to keep up with TSMC. However, it could also lead to a drop in prices if the increased production leads to an oversupply of chips. Investor confidence. TSMC's investment could boost investor confidence in the tech sector. The investment signals TSMC's confidence in the future of the semiconductor industry, which could encourage more investors to invest in tech stocks. This could lead to an overall rise in the tech sector of the stock market. Market volatility. However, such a large investment could also lead to increased market volatility. The announcement of the investment could lead to short-term fluctuations in the stock market as investors react to the news. Additionally, any changes in TSMC's plans or unforeseen challenges in implementing the investment could lead to further fluctuations. Investment opportunities. Finally, TSMC's investment could create new investment opportunities. Investors who are bullish on the future of the tech industry might see this as a good time to invest in tech stocks. On the other hand, those who are more cautious might choose to wait and see how the investment impacts the market before making any decisions. TSMC's $40 billion investment could have a significant impact on the stock market, affecting everything from individual tech stocks to the overall market volatility. As always, investors should carefully consider their own risk tolerance and investment goals before making any investment decisions. In conclusion, TSMC's massive $40 billion investment is a game changer, not just for the company, but for the entire tech industry. This strategic move is set to bolster TSMC's position as a leader in the semiconductor industry, potentially leading to significant long-term benefits for the company. The ripple effects of this investment are far-reaching. From consumer electronics to the automotive industry, the increased production capacity could alleviate supply chain issues and spur innovation across various sectors. This could lead to a wider range of products, potentially lower prices for consumers, and faster production times for manufacturers. On the financial front, despite some short-term challenges, TSMC's financial health, stock performance, and future growth prospects remain strong. The company's stock has rallied nearly 50% over the past 12 months, reflecting investor confidence in its future. However, this investment also brings to the fore the need for balancing growth with environmental responsibility. As the semiconductor manufacturing process is energy-intensive and can contribute to pollution, it's crucial for TSMC and the tech industry as a whole to commit to sustainable practices. Lastly, the stock market is likely to see some volatility as it adjusts to this major development. While this could create new investment opportunities, investors should carefully consider their own risk tolerance and investment goals before making any decisions. In essence, TSMC's $40 billion investment is a bold step towards shaping the future of the tech industry. It's a testament to the company's confidence in the growth potential of the semiconductor industry and its commitment to maintaining its leadership position. As we look ahead, it will be interesting to see how this investment unfolds and what it means for the tech industry at large. Stay tuned for more insights on this exciting development.